Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, well, we have embarked on an upper Bollinger Band ride here on the daily chart. You can see we started to break out here. We involved the upper band here, and we opened above it last night, so that very much qualifies as an upper band ride. I'll give you the same admonition that I gave you yesterday. Very, very typically, almost always, more often than not, this is not the end, but rather the beginning. The bears have a lot of work to do. And if the only reason you're coming in to short the market is because it's gone up a long way, that's not a good enough reason to short the market. The bears are going to have to capitalize on some of these small pullbacks that we've seen. We've pulled back 6 handles from the Globex high. Right now, we're engaging the upper band itself, which is currently, it's always a moving target, so I have to check here. It's 92.15, but you know it's going to continue to expand throughout the day if price heads higher. What we see more often than not is we see a move back into the upper band here, and if the ride really wants to get severe to the upside, you will see the upper band go support, and you'll see it reach for the gray line up here that's obscured by the bubble. That's the third standard deviation upper band. That, typically really gets the momentum headed to the upside. I mentioned yesterday in the chat room when we printed 94.25 that the 2300 round number is open. It remains open. They came within a couple of ticks of it, but it remains open for business. And if it gets up over the top of 2300, what you could see is a real push higher. What do the bears need to do? Well, the bears, for starters, need to take out yesterday's low. If you want to end a band ride, you need to go an entire day without engaging the upper band, and you need to take out the prior day low. The prior day low would be 74.75. If they can print below 74.75 today, then that gets them on their way to ending the band ride by Sunday going into Monday. But don't kid yourself by thinking that the bears are out of the woods and that we've reached some kind of exhaustion point here. These bands have been compressing for some time. They're just beginning to expand now. The Bollinger bandwidth is at 2.44. Typically, with a band ride, until it gets above 4.5 or 5, you don't really see the bands expand to the point where price can no longer catch up with them. So the bears' backs are against the wall, and they have a very serious risk of getting run over today, just like they got run over yesterday. So if you're going to try to short this market, you need to respect risk. You need to respect risk. It is so important that if your risk markers get hit, if your disaster stops get hit, that you respect those. Otherwise, you're going to be fighting price on a band ride, and that's the last thing that you want to do. We've done about 30 handles in a couple of days, but that doesn't mean much when it's coming out of this kind of band compression. So let's hop over on the hourly chart real quick, and then I'll let you go because we're going to open here pretty soon. So they finally converted 67.5 back on back on Tuesday. They held it. They do a new all-time high. We talked yesterday. They hadn't even involved the daily pivot, and yesterday was just a big old walk up. Okay, gave back very little last night. Go make a new all-time high. You got the daily pivot down here again, and as I say here, daily band ride dips are buys. Okay, dips are absolutely buys, and the first potential area for a dip is right here in this 92.5 to 93.5 area to see if the upper band wants to be support. If it does, then it can reach back and make yet another high. Okay, everybody have a fantastic day. Talk to you. Follow us on Twitter at Princeton Trader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.